Apes and apettes, welcome back to the channel. The green leprechaun hat did not find you the pot of gold today. We were down about 3% for AMC stock. The broad markets were down substantially. Look at Apple, down 2.6% today. AMC only down a little bit more than that is definitely a good sign. We're seeing a lot of positive data around AMC as far as the short squeeze is concerned. Markets continuing to go down, leading us closer to the ultimate end goal, which is the MOAS. Now, here in this video, we have some important things coming out tomorrow. You're either going to see a big rally tomorrow or a big sell-off, and we're going to go over exactly what could cause both of those and all of the data that you guys need to know. So if you can't tell, I am very excited. Get excited, baby. Hit the like button for me, as well as subscribe to the channel and comment down below. What is your thoughts for tomorrow? What do you guys think about these catalysts that are coming up? If you guys want access to all of my trades in real time, check out the pinned comment down below. We got the Apple puts, baby. They are printing some tendies for us, as well as that. Leprechaun choking over here. Make sure to check out the links down below in the description of this video to get yourself some free stock. It's never a bad time to get some free money, as your portfolio is likely crumbling in front of your eyes. So getting into this video, the S&P 500 was down 1.75%. The NASDAQ was down, let's see exactly what we did close. NASDAQ closed down 2.57%. It is a very bad day. We got Biden announcing sanctions on Nord Stream 2. U.S. official says Russia forces ready for an attack. That is live going on right now. You also have a lot of drama back and forth between Ukraine, Russia, all of that good stuff. Pentagon says it believes additional Russian military forces are moving into Donetsk and Luhansk regions. So overnight tonight, it's going to be very important, because if Russia does invade Ukraine further, you see more sanctions, more escalations. You know the market is going to sell off about that. That is a major fact right now. Nobody can deny that. But what nobody is really talking about right now is the Fed, and that is the key to everything. And we have major economic data coming out tomorrow that is going to really dictate how the markets feel when it comes down to it, because keep in mind, the Fed makes great markets, and they also kill great markets. The Fed is the markets, essentially, and their major data point is coming out tomorrow. I really want to hammer this home for you guys. At 8:30 a.m., you have the core PCE prices quarter over quarter. PCE, if you guys are unfamiliar of exactly what PCE means, I almost said PCP. I don't do PCP. PCE, a measure of the prices that people living in the United States or those buying on their behalf pay for goods and services. The PCE price index is known for capturing inflation or deflation across a wide range of consumer expenses and reflecting changes in consumer behavior. This is the number one metric the Federal Reserve, good old J Powell, young J Powell, and young Biden pay attention to as far as inflation is concerned. This even, is more important than PCI. Or CPI, PCI, CPI. So, keep that in mind. 8:30 in the morning. You also have a lot of other data that comes out, like the GDP sales quarter over quarter, jobless claims, 4-week average, initial jobless claims, GDP price index, Chicago Fed national activity index, and the GDP growth rate. These are going to be the most important things. What does GDP say? Are we starting to slow down? In fact, which that might be a bullish thing for the markets, believe it or not. That would mean the Fed doesn't have to act as quickly. Markets are not as hot as people think, but the PCE as well as the Russia-Ukraine drama is going to dominate the headlines. If you mix the two together and they are both bad, you can expect the markets to take a major down move. We close at a very important level today. If you see on the S&P 500, we approach $421.35 at the low end range. If you pull this up to the daily candlestick chart, we've seen a solid red candle down here. Comparatively to the last day we were down at these levels was right here. That was January 24th. That was the day we were down about 5%, and then we sharply recovered in the same day and actually went positive on the day, about 0.42%. So it looks a lot more solid green right here. You're seeing this typical M or W, in this case a M formation, which does come up a lot during sell-offs. And this even looks like the inverse head and shoulders that we were even seeing on AMC a while back over here. If you guys take a look at the S&P comparatively to this, it almost looks the exact same. So odds are we will continue to come down, in my personal opinion, but who knows there? That is anyone's guessing game. PCI and a Russian invasion, to try to predict what the Russians are going to do is a very hard feat to accomplish. We could see in after hours the markets are up minimally, just a little bit. So it's going to be important you guys are on the live stream later on tonight, 10 p.m. to 11 p.m. Eastern Standard Time. Make sure you guys are there so we can discuss everything that is going on. On top of that, I do want to point out, for anybody that hates Adam Aaron for selling out any of that, he has actually quadrupled his holdings now with 793,000 shares, as well as he does have 1.5 million shares that are granted but unvested shares. So keep that in mind. I think he's alongside us no matter what anybody thinks. I think that's a very invalid argument at this moment. As far as the rate hike expectations, PCE, depending if that comes in really high, is going to make markets and market participants expect faster and more aggressive rate hikes. This is the 0.25% right here. 66.3% of people expect a 0.25%. 0.5% is at 33.7%. Yesterday, we were at 70.2% for this number. So the expectations for a 0.5% rate hike have went up over the past day, and that is helping to contribute to this major red day that we are seeing in our markets. Don't think the pain is over, in my personal opinion, but I don't think it's going to be a 20% continued crash from here, just because the underlying economy, the fundamentals of businesses are very good. There's not really a systemic problem here, but feed does overtake fundamentals in times of uncertainty. So that's what you guys need to know as far as that. Put a lot of information on you guys. Make sure to go watch the video again if you did not hear everything. As far as the Ortex data for the short interest, good old shorts, 20.93% short interest of free float, 107.43 million shares that are sold short, cost to borrow max of 2.32%, and the utilization is at 100%, days to cover at 2.31. So not too much is actually moved around as far as the Ortex data is concerned, but like I said in the beginning of this video, this is very, very bullish. You're not seeing shorts slowly exiting their positions. You're not seeing them do that. If anybody tells you that, they are on bullshit. That's not happening. They are not exiting whatsoever. Short interest is continuing to climb. The option flow sentiment, this is at 0% for the day. 11 institutional option orders totaling $6.22 million. Positive order value of 0%. That's just showing you how bearish institutions are across the board. This is the same for any other stock you look at. Very low positive order value. And there is, according to the put to call ratio, about 80% of options are on the put side right now. About 20% of options are on the call side right now. So I'm not a big fan of buying calls right now, given all the turbulence in the marketplace, but it certainly is a good time to buy the dip and load up on great companies. So that's what you need to know from that. As far as if we do see a lower PCE number that comes out tomorrow morning, if there is no further escalation between Russia and Ukraine, I would expect the markets to bounce. Who knows if that bounce would actually sustain or if we would continue throughout the day. Likely you would see a gap up like we've seen today and then a sell off throughout the rest of the day. But nevertheless, 1,900 calls that are in the money, 136,000 calls that are out of the money. That is a very different ratio here, right? It's not even comparable to the amount of calls that are out of the money. So even though it's not a large amount, there is a large ratio difference here, and that could cause a bigger move up, as well as that 34,000 puts that are in the money. That controls about 3.4 million shares that would have to be hedged by the market makers if the stock price does go up in a major way tomorrow. So on dad duty over here, so I'm gonna have to wrap this up pretty shortly. But for AMC, like we said in the last videos, we did close under $16.23. I would imagine we make our way back to about $15 per share. I don't suspect we would go much lower than that, but we'll definitely have to watch out for that $13.40 mark down here. The MACD is converging and going bearish. The 20-day simple moving average was this right here, textbook reversal we're seeing going on right now. We touched that one part of the day right here at 1689, got rejected, and then continued to drop after that. So if we can, for whatever reason, see a good day tomorrow, break above 1623, that is looking very good. I would not bag on that at the current moment, and be very careful with the way you guys are positioning. If all else fails, cash is king right now. You cannot lose money sitting in cash. Forget inflation. Forget that shit. If you sit in cash for a couple weeks, a couple months, it's not going to hurt you. You're not going to lose money. Forget what they say. So that's going to be all for this video. Thank you guys for watching. Check out the links down below in the description of this video, as well as the link to join the trading community down below in the pinned comment. We have been doing very well. So thank you guys for watching, and I will see you later on tonight, actually. Peace out.